this afternoon that I would like to share a couple of things. First of all, that of course I would like to touch a little bit what are actually important. Why is it actually sustainable, and also climate risk assessment is important for financial institution. And then I would like to share a little bit of the journey of how we CIMB Niaga coming to the sustainable banking, and also what is the target and the next steps, including the challenges that we are facing. So, and because of the time, we would like to be fast and probably jumping in certain pages. But then, just let me know if I'm too fast, Ibu Rizkia. Okay, let me just start with the next page, please, Lina. Okay, I'm not going to stay long on this page. Basically, we just say that, of course, while we also, doing the business and take the profit, we also have to take care about the people and planet. In this case, so it should be a balance among these three P. So next page, please. Okay, I take this chart from the, the Intergovernmental Panel on Climate Change, which is, IPCC. This chart is to show how close that we are, that, again, I have to mention again on the Paris Agreement that we all know that in Paris Agreement, that about 195 countries in 2015, we have committed that we are going to hold the average temperature, global average temperature, not increase more than 2 degrees. And if with the best ever, not to increase 1.5 degrees Celsius above the pre-industrial level. So we want to know how far and where we are now. Okay, so this chart to show that, by 2017, we are already reaching almost 1 degree Celsius increase and the average temperature, global temperature. And, so we can see that, in 2040, then, we will really reach to this 1.5 degrees Celsius. And this will really impact to everybody. Of course, including to the banking, also the financial institutions. So next page. This I take also from the Climate Action Tracker, especially for Indonesia. If we look at this, that, in 2014, that we already, the emission that produced or emission in Indonesia is about 894 metric ton CO2 equivalent. If we do the business as it is today, we don't do anything. We don't do any we don't care about this climate risk. We don't care about the sustainability at all. So we will reach about 1,303 metric ton CO2 equivalent by 2030. This definitely is not acceptable. So then, if we actually only focus on the two sector, here is actually electricity supply and also to the passenger and rail transport, we can minimize the increase if we actually compare to the normal that what we do, and we don't do anything, we can save about 272 metric ton CO2 equivalent by 2030. So then, I can say that, if we focus on this two industry, then by 2030, instead of 1,303 metric ton CO2 equivalent, we will just, have it about 1,031 metric ton CO2 equivalent. This one actually without considering the other industry, which is, if we also focus in other industry, definitely it will be even less. This is not really best, but this is something that we should and we actually could achieve if we really take care about these two, industry. A couple of things that actually for these two industry we can do. For example, on the electricity, we can do the renewable energy, and then passenger and rail transport. For example, I think tadi Pak Pak Hernawan juga mentioned about electric motor, yeah, and also change, for example, from gasoline to biodiesel. So there are a couple of things that we have to think of what kind of product that in these two industries can minimize the emission production. Next, on the climate risk and its connection to the financial impact. We've been talking about physical risk, we've been talking about transition risk. For some people that really, as the basic, I think, the understanding is that physical risk is that, which is, post threat to physical assets, including building, equipment, and actually also including people. And then transition risk itself it could be policy risk, liability risk. I will talk about it later on, and then reputational risk, and also market norm change, like Ibu Nuraidi mentioned earlier. Not only shifting the market demand, but also as a pressure, yeah, and also to the investor that it will impact also our equity or share price. On the, what is actually the impact to the financial itself? For us, there are actually I can mention that about direct impact and indirect impact. Direct impact to us, can you imagine if this physical risk is happening, like flood, drought, sea level rise, and then, wind and so on, then, what is really the impact to, to the banks or to the financial industry? As a direct impact, for example, our buildings, our branches, if there is a flood, or actually even fire, if there is a flood, then we have a document, yeah, customer documents. We do actually, like in the vault, we have actually, some of the asset or some, perhiasan and so on being kept by us. It could be actually ruined. Then what happened? If it's documents and so on, that it will be actually increased. For example, our cost, our policies, insurance policies, we actually premium. We actually may also be what to call it, claimed by our customers. And then what? It means then go back to the transition risk. There is a liability risk. So the customer can sue us in the court. So it's really, really all of this risk actually is a fact. It's not that imagination, that so far, imagine this very complicated, but this is actually very, as fact, as something that in front of our eyes. Like, for example, if there is a flood, there could be actually, impact our telecommunication. For example, alat-alat is flood and then, and then the water, it will impact our telecommunication, electricity shut off. Maybe that, even our staff cannot go to the office. Even our staff could be actually, the houses also under flood, and probably also the health of our our staff. So it's really, really, direct impact to us. Indirectly, it will also impact to the customer, because I mentioned earlier, for example, about all this, the flood or drought and so on. It's definitely, it will impact our customer. For example, for those customer that, the industry or the location of the customer is highly climate risk sensitive, then, it's really all of this risk that I mentioned earlier will impact them as directly. Indirectly, also the same. They actually have a problem in the supplier, because of transportation and so on, it will impact their supplier. So what? At the end, those customers may not be able to repay us back the loan. So that, it's indirectly, if impact the customer, definitely also impact, the banks or actually the financial industry. So this is something that why we really, really think that very important for us, to really take into consideration all of this risk, to our business. Next page, please. The previous speakers were already talking about, SDG, Sustainability Development Goals, that as an understanding or, commitment from the countries that joined the Paris Agreement. Indonesia is part of them. that, Undang-Undang number 16, 2016, there is a Presidential Decree 59, 2017 on the SDG. And also, of course, we have the POJK 51, POJK 0.03, 2017. We also have a POJK 60, 2017 on the green bonds. So all of this actually, and also now, we have a sustainability finance road map phase 2. So all of this, of course, as a basis of, responding to those kind of risks that I mentioned earlier. Next, I'm going to share what is the CIMB Niaga journey. Again, I'm talking about journey because this is something totally new. Yeah, totally new. Yeah, totally new. So then, we really, it's a journey. We have to change our, sustainability vision and mission. This one is not very far from the bank's vision and mission. So then, but for sustainability itself, we actually have a specific mission and vision as the basis of us to change again, paradigm and the way thing that we do the business. Next page, please. We also, you look at the, this sustainable development goals, which goals that really directly relate to our business. And of course, there's an indirectly. We have five pillars here to support that, how we actually can reach this, sustainability development goals. Sustainability action, then, how we embedded our sustainability principles in our operational and also processes. Like, for example, we have to measure that, the usage of electricity, the gasoline, water, and so on. So for us, actually, as the basis that, when we come to how to decrease all of this. So then, we try to do the action internally for us, for CIMB Niaga itself. And then the sustainable business is that, we start also to look at the how we actually can generate profit, in a responsible manner. So then, we can come with products, product services, like, we do actually, we have a BSI here that then we actually this year have some sustainability products from Syariah that we are going to start doing this year. Also portfolio and how we actually encourage our customer on their sustainability journey. I'll talk about it later on. Government risk, government and risk. We govern that, how actually our sustainability report is actually transparent, including that we are going to set the target and tolerance level. We are going to have this target and also tolerance level. Stakeholder engagement and advocacy, actually how we actually being very active in the building capacity, internal, also to our customers. And the last one is the corporate, social, so CSR, how our CSR can support this sustainable strategy in CIMB Niaga. Next. I will not go because of the time constraint. Basically, it's mentioned earlier that on top of all the risks, that 8 risks that, usually that we are very familiar to, credit risk, whatever, liquidity risk and so on, there is actually one risk that we need now to start also to do the assessment. Assessment first to our ourselves, what is actually that, the risk of CIMB Niaga itself. On top of that, of the customer sustainability risk. Yeah. So then, we have this environmental risk, economic risk, and social risk. We have this, of course, the governance and then assessment, reporting, and communication. I'll talk about it later on in the next pages in more detail. Next. I jump this, going to be the next one, please. Yeah, okay. This. We do actually sustainability due diligence, not only to credit, but also to the non-credit. So to the vendors, to our subsidiaries, even actually to the BOD and BOC and Sharia board, and also to the business partners. Like, for example, we have a bank insurance. We actually work together with an insurance company. We do actually also, we have due diligence to them. Whether or not, for example, this exclusion list is for those who are involved on this, of course, is big no-no. But then, we do have some very, basic sustainability due diligence on the environmental issues and social issues. We look all those our partners, whether they have an issues on the environmental and also on the social issues. And then, if they do, for those we are not going to have a relationship with them, and we will put them in the watch list, our watch list. For those customers related to the credit, the same thing. We, for this exclusion list, of course, we actually say, no. And then, we have, for example, simple sustainability due diligence. But then, if in the simple of the due diligence they fail, then we have to do the EDD. When do EDD, we use Sustainalytics, and we actually identify whether those customers are considered in the high risk or non-risk. When I'm talking high risk here is not credit, we are talking about sustainability high risk industry, or actually they are not in the high risk industry. And then we will say whether they comply or non-comply. And if we look at this color, we have 6 colors. We actually give our credit customer in the 6 color. The green is the risk, and the black we say prohibited, and then we put also high risk, and this is actually we are talking about before is about acceptance. How much is actually that CIMB Niaga can accept this? We should actually put it yearly. How much percentage of our customer that can be in the high risk, the red, black for the red because we don't have any relationship. How much percentage that we actually in the yellow, or the medium high risk, orange that. So this is the acceptance that I'm talking about earlier. Next is in the sector guidance. We actually already identified there are 7 industry we consider as a high risk. The 7 industry we do have a 35 sub sectors, but anyway, the 7 industries that agriculture, or then forestry, real estate, mining, and then utilities, constructions, and infrastructure. There are 7 industries we consider as a high risk. And we make a sector guidance. I'm talking about slowly because apparently to make a sector guidance is not easy. So we finalized already sector guidance on the palm oil, on the coal. We are now in the process on the sector guidance for construction and real estate. In the sector guidance, we look at, we say that, for example, for palm oil, what is we expect from them? What actually is the minimum expectation from them? And how we encourage them. For example, we expect them to have ISPO, Indonesia certification, so palm oil, so ISPO. But we encourage them to have a RSPO. And how many customer, or actually from all the portfolio in palm oil of our customer, how much actually acceptance again, that we accept customer without the certification, Today, we actually, for example, request our customer that 80% of their, of the plantation have to be certified in the ISPO. So this is, for example, that, we talk about what is expect and how we encourage them, that they must actually, now today, they are not actually reached to 80%, that, by certain years, they will have to certify 80% of their plant, for example, to be certified. Prohibited, for example, we say that, no pit, no exploitation, no deforestation, so then of course we have a prohibition for this. So each sector we have the expectation, encourage, and prohibition. So we finalized only 2, we are on the 3rd one, which is on the real estate. We are going to cover the 7 high industry which I talked earlier. Next. All of this actually need journey, so we need to have a training, how to increase, or the awareness. This is, we do it from all the leaders from the director level go down, and in fact we have learning on the go, is that from the mobile. So our staff is mandatory, mandatory to take this one, that sustainable finance or e-learning, and in fact start this year, our CEO, our director, to 3 level below, they have to put their sustainable KPI in their KPI, in the balance scorecard. So, minimum 5% of their balance scorecard performance is that, related to sustainability. And then our unit, which is, the one who is responsible to have this framework in the bank, will actually, well, decide each unit what things that in terms of sustainable that you have to reach or you have to meet by this year. Yeah, so it's 5% is evaluated based on the sustainability itself. So this is something new, but actually to show how serious CIMB Niaga on this one. Next page. These are the things that we already done, or actually some actually in the process that, of course, I'm responsible for this sustainability. Then, to make sure the bank has a framework, we start also going to think about, how to climate change risk mitigation. I have unit helping me on the strategy itself. We already, mapping our internal activities, then portfolio of our customer, as well as actually product that related to which one is high risk, which one is middle risk, that I mentioned earlier. And then, on the risk management itself, we already have the, EDD or CDD or SDD or EDD. Yeah, we enhance due diligence. Enhanced due diligence is done by third party. In this case, it's by my unit, which is, our unit is an independent party, independent unit. We are not in the risk management. We are not also in the business. So it's EDD is done by us as an independent. So will be objective on this one. We do actually have a system to support this, because otherwise, if doing it manually, it will be too troublesome. But then, we have a system to see that, after the EDD or SDD, whether this customer in the green, yellow, red, or high, risk and so on. And then, on the greenhouse gas, our last year, we already declare our, greenhouse disclosure. Maybe on the next page. Next page, please, Lynn. Yeah. Okay, this one actually is then, our carbon footprint. We declare how much is actually that, the bank is contribute to carbon emission. On the right side, is about 34,000 tons CO2 equivalent. And on the left side, directly, how actually we can, we can preserve the potential carbon stock, which is, because we as CIMB Niaga has this CSR plant bamboo since 2011. So we actually are, using very technical way how to calculate that this bamboo that can, preserve the potential carbon stock. So this one, we actually per area, we just do it on 2 area, whereas actually we have 5 or 6 area.
Bu
And then,
Fransiska,
of course, bank digital and so on. Yeah,
one
next.
moment.
Okay, next page, please. There are next steps. Okay, 1 minute, but basically, there are still steps that we have to do. Climate risk is something that very not easy, but we were going to do, the climate risk to assess that our carbon emission that I mentioned, that we already know the carbon emission, how much is actually that we produce this carbon emission, and how we actually can, we can minimize this carbon emission, because we already have the baseline. So how actually we're going to do this? On the strategy, of course, then, how we embedded this, our sustainability or, climate risk assessment will be in doing our business, including on the risk management. This is something that, how we going to embed this assessment on the climate risk analysis in the credit analysis of the customer. This is something that difficult, but because we have to do some scenario, understand the customer, business, and so on, and all the risk, sustainability risk of the customer or climate risk of the customer. Metrics and target, we're going to have a target on this. But then, it's also difficult because, target, if we don't achieve target, everybody will aware of this, but this is disclosure. Next. Our current challenges, I think, it's mentioned earlier about the awareness, and this is one of the things. Very important, this is awareness not only from the banking side, but also from all the other industries, because our customer is coming from our industry. If we, the bank, keep on doing this, okay, OJK do this, do that, but if the other industry, the other customer do not actually have the same awareness capability, it will be very difficult for us to achieve this one. Second, actually, climate risk implementation. Of course, we need to have a capacity building. Again, to tell you the truth, in the market is still very scarce. So then, is how we have this expert on this, because it's very complex. And then, clients' readiness and acceptance. Again, I think it's still limited supply on the product itself, on the company, and supply on the product that we actually can invest. And also, it's very difficult for us to look into I mentioned earlier about how we're going to do the sustainability or climate risk assessment to the customer. It's not easy for us because there is no disclosure or transparency from the customer. Regulatory push, we need also support from the government. From not only from OJK, but also from other from the government units. Lack of common definition, I think it's earlier mentioned by Ibu Nuraida and also by Pak Hernawan, that we need to have more framework and understanding, common definition and framework on this about the green products and so on. Okay, next. I think the last page is that current need. Yeah, we need to have a capacity building. Partnership is that, partnership is not only with the, among the government bodies, but also, of course, because a lack of expert, we also need to have a partnership with NGO, and also other experts, probably also from other countries who are actually more advanced already on this. So we have to be open about that. And then policy development, we need also support from the government on the regulations. Okay, I think that's all from me. Thank you so much for the opportunity.